get some hot picks. Our guest covers the telecom sector. He's got some ideas. We're calling them growth stocks. Rogers and TMX are two of his ideas. We're joined by Aravinda Galappatthige. Thank you very much indeed for joining us. He's Managing Director and Institutional Equity Researcher at Canaccord Genuity. Really appreciate it.
Thank you, Andrew. Thanks for having me.
Now, can we start off with Rogers? I don't know if we can call it a growth stock. We were scrambling to find a label to cover all three of these. But investors have been worried about the balance sheet, but you do see potential here.
Yeah, I mean, we upgraded Rogers very recently, and it was really the catalyst for us was the closing of the infrastructure deal. That brought in $7 billion. There was some uncertainty around when that would close, but we're at a point where we know, I mean, that is essentially closed. So that starts to heal the balance sheet and move the delevering process forward. And I think on top of that, we also know from all the public comments that they have made that there are discussions, ongoing with respect to some sort of monetization of the sports assets. And that's where things really become interesting because Rogers, very simply, the way to look at it, it's a $19 billion market cap company where there's $15 billion in assets that get essentially zero value. And you can argue whether it's 13, 14, or 15, but in that neighborhood, that get essentially zero value because that's in the sports category and it doesn't really, generate massive free cash flow. So if there is a transaction, then you get additional delevering, obviously, but it's a catalyst that can drive the value of the stock because, those assets become incorporated into the value of the stock.
We're very tight for time. I'm sorry, just very quickly, though, the sports assets could be worth what?
The company has said 15 billion. You can argue for 13, 14, somewhere in that range, but it's a combination of MLSC, the Jays, the Rogers Center, Sportsnet, even the Budweiser stage. So you put all that together, I mean, it could be in that territory.
TMX Group, you see promise there, and there was pretty strong Q2 results. That stock has been hitting record highs this year.
It has. I mean, TMX falls into a very unique category of stocks, which I've kind of used the phrase maturity to growth. I mean, companies that are steady Eddie incumbencies that grow no more than 3-4%, but due to various reasons, find a new growth wave. And those stocks are always very attractive and big outliers in terms of performance. And what TMX has become is it's moving towards a double-digit EBITDA grower, and that's meaningful when you see that transition. So they have diversified into analytics very effectively. So they bought a company called Verify that gets them into the ETF business in a bigger way. Their business in Europe, which is Trayport, an energy trading platform, is a major growth for them. And then the derivatives business has huge potential in Canada. So they own the Montreal Exchange and they have a controlling stake in the Boston Options Exchange. Those are major double-digit growers as well. So it's probably not the old TMX Group that you remember from a few years ago. It's a genuine growth story now, and you're seeing that in the movement of the stock and the expansion in the valuations.
And finally, you have a small cap idea for us. I'm showing a market cap of less than 100 million. NTG Clarity Networks, and they're diversified IT services companies, software development, software testing, technology consulting.
Yeah, it's a digital transformation business. And the reason it's interesting is that they have a really strong foothold in the Kingdom of Saudi Arabia. And, Saudi Arabia is going through a major transformation in their economy, moving towards digitization and essentially looking to diversify the economy beyond oil and gas. And it's called Vision 2030. And what NTG has is a very strong set of relationships there, and they're winning bigger and bigger contracts there for essentially outsourced software development work in support of that. Vision 2030 and the initiatives involved there. And they have a very sizable group of developers that they have in Egypt. So the talent comes out of Egypt, which is more attractive from a pricing perspective. and then they do the work in Saudi Arabia where the contracts are sizable. So it's been a real sort of, it's a genuine growth story. Recent quarters have seen almost 100% top line growth. You should see more action there over the next couple of years as well.
That's interesting, using software expertise in Egypt. Aravinda, that's a fresh idea for many of us. Thank you very much indeed for joining us. Aravinda Galappatthige of Canaccord Genuity.